Good morning and welcome, Patriot Radio News Hour. Joe Jaquin here on this Thursday. I hope it finds you well out there. Man, I told you it was going to get interesting. Monday and Tuesday were kind of quiet. That is over. It is long gone. A huge drop on Wall Street taking place right now. We heard from Jay Powell yesterday. We'll talk about that. Jobless claims. So yesterday we had jobs, ADP jobs, barely above 100,000, much lower than expected. Wages not keeping up with inflation. Today it was jobless claims. I thought it was going to be a big number, and it was. And we're actually lucky that it wasn't a lot bigger. Jobless claims 249,000. So that's the biggest in a year. It actually was more than that. Texas actually subtracted about 20,000 from that. So that was the storm in Houston. Remember, the power was out for 4, 5, 6 days. That started to normalize. So it was 249, and it was probably somewhere in the 260s, in reality, maybe even 270. Don't know is it enough for rate cuts? We'll see. Jay Powell saying maybe sort of, gave himself room. Maybe I can, maybe I can't. What's not giving you room, gold continues to march higher. I warned you about that yesterday. Get ready for all-time record highs once again. Our toll-free number, 800-951-0592. We had way more bankruptcy filings, and it's getting kind of interesting. The latest now, Badcock Home Furnishings. They got 400 stores, so this isn't some company you never heard of. Remember last week, Con said, wait, we're going out of business. Now these guys, they're going out of business, straight to liquidation. Every single one of their 400 stores are going out. Buca de Becco, the restaurant chain, they're closing about 25% of their stores. John Deere, the layoffs, continuing at Deere, continuing claims. 1.877, the highest since November 2021. Jeff Gundlach was on TV yesterday. Matter of fact, you go to allamericangold.com. It's about a 5-minute interview. You can check out what he had to say. But here's what they were talking about: rate cuts. He thinks there's going to be 6 rate cuts. If that's right, yeah, $3,000 gold, yeah, that makes sense. Right? That makes a lot of sense. 6 rate cuts. Says that when we go back in time, a year from now, he believes the United States is going to be in recession in September. Says that they may not know it, right? Because, the data, it's always, the data's behind. But he thinks recession starts in September. And the one big thing that he was talking about was people are getting laid off, and all of a sudden not finding work. Started talking about leisure and hospitality. Remember, we talked about that yesterday in the ADP number, how low that was. And now today, continuing claims, when you get above that 1.9, get closer to 2 million, right? Then you start to get nervous. So I'm not at the nervous point, but right next to it. We're right next to nervous, but I expected this. I think it's going to go higher as, all of these stores, as they start the liquidation process, we're going to start seeing thousands of people heading to the unemployment lines. And of course, the restaurants and the retail, those used to be the jobs that, they couldn't fill. Well, They're full now. And then the other thing that he talked about was the amount of people with multiple jobs. He says, a person's got 2 jobs. Well, they count that as 2 jobs. He goes, but it's only one person. It's only one person. And essentially saying that he expects a major step down in employment. Talked about the unemployment rate going up. Thinks it's going to continue to head higher. To make matters worse today, we did get some economic data. We had manufacturers come out and say, boy, something changed in the month of July. The PMI falling to 49.6. That puts it in contraction mode. The ISM part, 46.8. So deep into contraction. They were expecting contraction, but of only, 48.8. Came in at 48.6. To give you an idea, what does that mean? Because, I don't know. What does 48.6 mean? That was the COVID lows. And so the manufacturing part of the economy has come to a screeching halt. They're saying business conditions worsened in July as new orders fell significantly. Purchasing activity is falling. Hiring has stopped. Weaker than anticipated sales. Firms are expecting the weakness to be temporary. I guess if there's some good news, they're hoping that it's temporary. And they're hoping for, ready for this, investment ahead of the presidential election. It's the Radio News Hour. Stay with us. 800-951-0592, Patriot Radio News Hour on this Thursday. Now, remember, tomorrow we get the government jobs number. How low is that going to be? We don't know. It's been surprising to the upside most of the time, even though the unemployment rate has been ticking up. We'll see how it goes. The lower the number, if there's another rise in the unemployment rate, don't be surprised if we have record high gold tomorrow. That's very, very possible. Then again, if you have this big upside number, you may have some profit taking. We'll see. Right now, looking at the market, the Dow's down almost 500 points. And again, Jay Powell left the door open. He left the door. He gave himself plenty of room either way to either cut or not cut. But said, hey, we're not political, and if we need to cut before the election, we're gonna. Wonder what that means. The S&P's down 40. The NASDAQ's down 170. We had earnings out of Microsoft, not great. Meta was okay. It was okay. They probably so far, they've been the best one of the group so far. I think we're going to get Amazon today. We'll see how they do. But a lot of CapEx spending over at Meta, but a fairly decent report out of them, probably saving the NASDAQ from being down, 700 or 800 right now. The 10-year note below 4%. Remember what Jeff Gunlots was saying here. The bond market is worried that the economy is worse than what they think it is. We'll see. 398 right now on the 10-year note, depending on where you look. So gold on TV, gold's up $20. But gold actually, when Jay Powell came out, the gold market's in the electronic trading area. But right now, I'll tell you, gold's flat at 24.48. 24.48. TV right now is showing the December gold contracts. The TV will set will always show the most actively traded contract. That contract right now is sitting at $2,495. It's been over $2,500 already today, and the Japanese yen holding at the 150 level. Remember, they raised rates yesterday. Now, Japan's economy is much slower than ours. It's not a good thing, right? For them to be forced to raise rates. We're talking we need a rate cut to defend their currency. Not only that, they need to lighten up on quantitative easing. They've been like the only buyers in their bond market. I mean, there were some bond sessions in Japan where they were the only buyer. Right? There was nobody there. Talking about their central bank. Get ready for some dark times. I keep telling you this. When we talk about the election, I get it. There's a lot to watch, isn't there? Like, Trump was at the Black Caucus yesterday, and what, boy, right? Some zingers were coming out there. It's all noise. Get ready for what is coming. If Jeff Gundlach is right, he's talking about 6 rate cuts. That means an impressive slowdown is coming, and I think it's coming everywhere. Right? It's coming in Japan, it's coming in Europe, it's coming here, it's already in China. I mean, it's everywhere. Start to get ready. We're starting to see this volatility in the stock market, aren't we? That's usually another one of those bubble signs. Look at the 10-year note just saying, hey, man, we think this is rough. The manufacturer said, we don't know what happened in July. It just stopped. But we're hopeful it'll get better. I don't know that it is. I hate to say it, but that's just what it looks like. Get more diversified. Stop messing around. Summer's over. Listen, it's August. Summer is over. Well, vacations, stuff, right? Back to school's getting ready to start, all of that stuff. Do yourself a favor. If you've got $50,000 or more, at least check out our friends over at Y-Refi. At least check them out. Up to 10.25% fixed rates of return. I don't think we're going to see 10% plus on Wall Street in 2025 and beyond. I think it's going to be years before you do. It's not correlated to Wall Street. You can use your IRA, though. Pretty cool. Some of you can use a 401k. I know how many of you got way too much money in the bank. Seriously. Now, think about this. If Gundlach is right, they're going to whack rates like that. You're not going to get paid squat again on your bank accounts. Check out Y-Refi. Invest, YRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them at 888-Y-REFI-24. That's 888-Y-REFI-24. Let them know I sent you. By the way, Intel has already been laying off staff in 2023. They just said, guess what? It's not enough. We're going to have to cut thousands of more jobs. Intel saying that despite all the government has, they've got $8 billion from the government to build chips. I'm not kidding. And they're saying, well, thanks for the money. By the way, they didn't give a number. But thousands, I'm thinking 5 to 10, maybe 15,000 right now. Intel with 110,000 employees. They had 123, so the last time they got rid of 13,000. We'll see about this time around. And then Wayfair. Because it's earnings season. What have we seen on earnings season? Let's see. The banks, They're like, oh, yeah, everything's okay. And then as soon as they reported earnings past the stress test, then they started complaining about people not paying their bills. The tech, right? The Magnificent Seven, so-so, not great, not magnificent. Almost universal, though. Anything to do with the consumer, not good. Airlines, not good. Even though they had record travel, they're like, it's not enough. It's not enough. Walgreens. Hey, we got 25% of our stores that don't make any money. We're going to start closing them. Right? You heard it from like Procter and Gamble and all these big Nestle, the huge food companies. Oh man, grocery business is stinking right now. Yeah, we're making some money, but sales are way down. And now Wayfair said that sales have declined in the second quarter, liking it to what he called unprecedented slowdown, saying that this is like the 2008 financial crisis. Our credit card data suggests that the category correction now mirrors the magnitude of the peak to trough decline in the home furniture space experienced during the great financial crisis. Think about it. We just have Babcock just say, hey, we're done. Closing them up. Cons, closing them up. Right? We're done. Red Lobster, right? Hey, we're going to shut 99. You know what? Now we need to close another 125, right? This is Buka, right? Hey, we got to shut down a third of our restaurants. It's coming. It is coming. Consumers continue to remain cautious on spending for their homes. The shares are down 10%. Sales were down year over year. So this is something, a little newer, because the inflation, the companies were like, okay, sales, the units were down, but sales were flat. They bought less, but because we had higher prices, it was like, now we're starting to see, yeah, we raised the prices. Sales are still down, right? We raised prices and sales are still down, and now Wayfair coming out and saying, hey, here's what we're seeing with us. The peak to trough of the financial crisis, saying it's that bad right now in this segment of the consumer. And I think it's starting to spread everywhere. And then there was a warning out too. And I don't know how many of you are involved in this, but if you are, I would make a significant change. The Federal Reserve, along with the FDIC and the comptroller of the currency and the federal supervisors of banks, have issued an 11-page warning on what will go wrong when federally insured banks get in bed with uninsured, untested financial technology companies. These financial companies, technology companies, lovingly called the fintechs. So you guys kind of know what that is. On Wall Street, Silicon Valley, big money by venture capitalists who bring these sexy little sounding things to the market. Well, guess what? Guess what's happening? These are places where, like Zelle, Cash App, all these other places out there that now offer you, like you think you're banking at a bank, but you're using the fintech to do it, you're not covered. And they're saying that it's going to create turmoil. They're very concerned that the fintech is in a lot of trouble right now. We will see, Zelle, which is early warning systems. It is operated by the 7 largest banks and is often integrated into consumers' online banking and mobile apps. These are the ones. Now, I'm not saying Zelle's in trouble. I don't know. But for them to issue this warning, I just want you to be aware. For some of you that are heavy into this fintech, check it out and make sure you're not going to be in trouble. There was a company, Synap. Customers couldn't get their money, and the banks froze their accounts. And they could have no access and couldn't get it worked out and couldn't find the money and, all this stuff. I liken it to like Freed, the guy that with the crypto thing, with the parents that went to Stanford and all that, right? No one can figure out where the money is. This is crazy. How are these things allowed to operate? Where's the regulators? As always, the day short and an hour late, right? Patriot Radio News Hour. We'll be back after the break. (800-951-0592). Oh, by the way, Stellantis Jeep said that they're getting ready to start with layoffs and are going to start dumping money-losing production lines. We'll keep you posted as Ford, GM, Stellantis, a daunting second half appears to be in front. And again, like I said, jobless claims say 249, but you remember Texas actually was subtracting because of the residual from the power. I mean, were we going to see something in the 270s? High 260s, low 270,000. That would be another big jump. Remember, we started the year, 210. Remember, I'm just going to say 210. And it'd be somewhere real close to that every week. Now we jumped into the 230s. Now the 240s, 249. But if Texas had been normalized, right, that number would have been closer to 270. And all of a sudden, right, we've got a much different picture as we look at, Jay Powell yesterday doing his best to say, hey, we'll see. I think that was his answer. Hey, we'll see. And here's what he kind of alluded to. If the job market continues to cool, yesterday, cooling. Today, cooling. We'll see what tomorrow brings. And again, I think I don't know that the number of jobs created will be the biggest thing. Maybe the unemployment rate. That's something I think that could now start to become more important. And talked about overall economic activity and then, of course, inflation, right? If inflation keeps cooling, then yes, we could cut in September. When asked about cutting during the election cycle. So September, right, I guess you could kind of say that's, going to be right before things really get heated up. Because, middle of September through the election, that's when they really pick up. We'll get a debate in there, maybe 2, stuff like that. He brushed it off and said that it would not be a problem for them to keep cutting if they had to. So it's on the table. Let's just say that. It's on the table. But then you think about what Japan had to do yesterday. Their economy is not our economy. Their economy is right teetering on recession. And they had to raise rates and had to say quantitative tightening, we're slowing down tightening. That's like raising rates. So it was almost like a double rate hike, like a 50 basis rate hike. Instead, they went up 25, but you understand what I'm saying. And then saying we may have to keep raising rates, all to try to defend their currency. Why do they need to defend their currency? Well, the answer is simple. You got too much debt. Nobody wants it. Right? I mean, BRICS is coming like a freight train. Think about here. Yeah, they're going to lower the rates. Jeff Gundlach says 6 times. Right, so that would put us at, 4%, something like that. Maybe 3.7, 3.75. How much harder will it be to sell the debt? The overwhelming supply as the Treasury came out. It's so funny. And they tried to make it act like, oh, it was okay. It's fine. Yeah, just another $125 billion. What's another $125 billion between friends? The day before, you said you had to borrow $1.3 trillion. Well, okay. Well, now I guess it's really 1.4. And of course, I told you it's probably going to be close to about 1.6. We're going to end the year somewhere approaching $37 trillion. Next year, 40. What about an economic slowdown? What happens then? And I hate to tell everybody this, but here's the truth. We don't have much time left. Where's all the money? Where's all the money? Well, when you look at government spending, it's only in a few places. Social Security, Medicare, Medicaid, defense, interest on the debt. Just those 4 things. It's over $5 trillion. By the way, Bank of America thinks interest on the debt next year could hit $1.6 trillion. That would make it as big as Medicare and Medicaid, bigger than Social Security. Heck, just those 3 programs, the Bank of America's right. I've got no reason to doubt them. Those 4 programs next year, instead of $5 trillion, 5.5, $6 trillion. The government only, the government this year is going to spend a little over $7 trillion. So all of the money, I just said, okay, 5 out of the 7 is in those 4 programs. And guess what? Next year, it's going to get worse. It's going to take up even more. Which means what? We're not going to spend $7.2 trillion next year. We're going to spend 7.8, right? The cuts need to happen. And could you imagine what will be going on when this collapse starts happening? When jobless claims gets worse. All of a sudden, the money for Social Security and Medicare, Medicaid start going away because that's how it's funded, through the FICA tax. Whoops. People who haven't figured out, Jason has just joined us. Jason, welcome. I know you're recovering from that surgery. But man, oh man, oh man. People are talking about, hey, we need to back the debt with gold and Bitcoin, and everybody and their mother saying, uh-oh, When are we going to start cutting Social Security and Medicare and Medicaid? Yeah, that'll be the day. We'll be back. (800-951-0592). Joe and Jason now here on this Thursday. The losses continuing to pile up here. The Dow's down 535. The S&P's down 60. The Nasdaq picking up some steam here because, like I said, Meta's earnings were okay. They were okay. Down 300 points. The 10-year note at 398. And gold just doing what gold does, right? See, 24, right below $2,450. And I think tomorrow, with this jobs number, if it comes in how they want it to come in, lower number of jobs, let's say, something in the 100,000s, right? 150, 160, 170, anything below 200, I think they're going to like. Another tick up in the unemployment rate. Could we see 4.2 or 4.3? Those will be indicators that the gold price is going to continue to head higher. And it's just a matter of, we're at this point now where the deficit just starts taking off again, right? Because you have that one quarter, that second quarter, when everyone pays taxes April 15th, right? You get a little reprieve, and then it goes back. But now, if the economy finally does slow down, which it looks like, it's pretty clear it is, slowed down. That means those tax receipts are going to fall. And the debt, you see, it's that double-edged sword, right? Oh, my God, now the tax revenue's down, right? And then what do they want to do? Well, we want to spend more money. And whoever wins the election, they're going to want to spend money. How can we pay for it all? That's the big problem. And everybody, listen, it gets so much worse in 2025, 2026, and 2027. These next 3 years, Medicare, Medicaid, and Social Security are an absolute train wreck. It is simple math. That's why I've said it over, and I know some of you get mad when I say, well, it doesn't matter. Trump wins, Kamala wins. It doesn't matter. It doesn't matter from an economic standpoint. They can't stop this freight train from coming. We ran $10 liberties at the beginning of the week. That's $1,295. Gold's flying since then. Heck, by tomorrow, we can have gold up $100 just this week. $10 liberties today, $1,325. $20 liberties, $2,650. So they're about the same, right? $1,325. The $10 liberty, that's saving $25. But Jason, gold's $2,450. You're buying a $10 liberty for like $100 over. You buy 2 10s, right? You're like, well, gosh, that's $1,300, $2,650. Gold's $2,450. And you know what? Tomorrow, gold may be $2,500. It may be over $2,500. Already, December gold's over $2,500. All of 2025 is over $2,500. And now they're talking about, forget about one rate cut. Now they're talking about, remember that one guy at the Fed, remember on the dot plots, he had 6 rate cuts? Well, Jeff Gundlach yesterday said, hey, guess what? That guy with that dot plot, he was just a little early. That's probably what's coming next.
Yeah, I'm not sure if they'll get 6 rate cuts, Joe. I don't know. I see him getting a 1 or 2 done. We're heading into a long-term inflationary cycle. I'm talking decades. We've talked about how many times how hard it is to get a house, right, Joe? It's getting harder to buy a house. And then we talk, and a few months go by. This is all since COVID, essentially. Oh, now it's hard. Look how hard it is to own a car. Well, that's going to be what, Joe, it's going to be how much harder is it to own an ounce of gold? And this is going to continue. They're going to, over a long period of time, Joe, they're going to try to inflate this debt to GDP. I think the debt to GDP is the thing that they're tackling now. And this is something that's going to take, it's not going to take, they can't get this done in months, in a few years. This is something that's going to take a decade or 2 decades to get done, maybe longer. And they're the prices of goods and services will go up. Joe, our debt to GDP, as bad as it is, we have one comparable time that we can look at. It was a time when they did a global monetary reset. At the end of World War II, our debt to GDP was very comparable to where we're at now. And what did they do? With that huge debt and that bad debt to GDP number, the prices of goods and services after World War II, Joe, what was it by the 1970s, 25 years later, right? I mean, look at gold, $35 in 1945. You can probably say in the 1970s, $350, right? It's a pretty good price range of where it went. 10x prices going up. The owning things like property, like cars, like homes, like gold. This is where all the biggest, richest men in this country are going. They're all running to this stuff. Everything. If you watch on the news, you look at it. Maybe in the next hour we'll talk a little bit about Elon Musk. Look what he's looking for. Suddenly this guy's wanting silver. I was watching some stuff about how he was going after lithium in foreign countries and how he supports coups to make those countries fall in line so that his company can go in and get these things. Well, if you're going to do those kinds of extreme things, Joe, you better be owning things. And I think the rates will go down. 1, 2 rate cuts, 3, I don't know. But remember what J.P. Morgan Chase, right? He said 8%. Remember he said 8%? I think we're going there. I think we're going to be there next year. I think the rate hikes will come right behind these rate reductions by next year, Joe.
Oh, man. Strap it up, right? Get ready. The year of chaos, it's getting ready to end. And then, of course, we go into the dark times are coming. $800-951-0592, $10 liberties. Yesterday, I told you, $12.95, but I had the right to change it, right? Well, guess what? Yep, it's changed. $13.25, $20 gold pieces, $2,650. You buy 20 or more, we'll take them down a little bit. $13.15 on a $10. On a 20, we'll go down to $26.30 at 800-951-0592. And I'll just say this: I got $2,700 golds now on the clock. $2,700 gold is now on the clock. If tomorrow goes the way I think it's going to. Remember, I said it all week. I kind of had a good idea of where this thing was heading. We don't know. It's not like they call ahead of time. I'm just, seeing all the things. I've been doing this for 20 years, right? You do something a long time, you learn a lot. Today's jobless claims number really was a much higher number than what it said because of Texas. And what that tells me is I'm going to look at that unemployment rate. Continuing claims just this hit the highest levels in 3 years. So it appears to me that this jobs number is going to be the lowest one yet. Number of jobs created, I think, could be the lowest of the year. On top of that, now again, they do, who knows with their seasonal adjusting nonsense. But I'm going to be looking at that unemployment rate. Will we get another tick up? And once 2,500, once that clears, and like I said, we already got the December contracts and everything beyond it at 2,500. Jason, that puts $2,700 on the clock, and all of a sudden, at 2,700, what are you paying? $1,500 on a $10 gold piece, right? You want to pay $3,000 on a 20? Believe me when we tell you, these are really affordable prices, especially, like I said, You're paying $200 over spot, and spot's almost $2,500. I mean, Jason, that's single-digit stuff. That's really hard to do, and it's something that won't last. That's kind of the problem. If all of a sudden everything starts slowing down, and because it's gradual, then suddenly, right, then everybody flocks to it. Remember, buy, and then you start paying $400, $500, $600 over. Buy it while the premiums are still affordable. 800-951-0592. But understand, we talk about this stuff daily. The bigger picture over the next 3 to 5 years, let's say between now and 2030, it's overwhelming what is going to happen to the debts in the entitlement program. I don't see any way out, Jason. I see a digital currency. I see major cutbacks in these entitlement programs. How can you do it? We can't afford it. We made promises that they couldn't deliver. Remember how they were going to deliver it? The debt was going to be paid off, and we'd save all that money on the interest. Well, Bank of America said that would have been $1.6 trillion. Yeah, well, we didn't save it. So guess what? Jason, you could be right. 8% could come because otherwise nobody's going to want to buy it.
Yep. Print and inflate. That's the next decade to 2 decades, Joe.
Now it's down 600. $10 lift, 13